Hey guys, I'm Manisha Gupta and we are in a kind of economy where there are a lot of concerns coming in from all corners. It was pandemic earlier and then it has been war, and we are looking at recession fears, high inflation, even stagflation. You know, it was 1970s the last time you heard the word stagflation, and maybe we're not right there, but we definitely are very close to that zip code, I would say. We are looking at all the recipes, all the check boxes that you have to have during stagflation. So to begin with, it is the rising commodity prices that we are looking at. It is high inflation, even as we've heard that word that it has perhaps been transitory. That word clearly has seen a drop as well. So when you look at UK, the inflation is at 30-year highs. The US inflation is at a 40-year highs. The global food inflation is at record highs. And when you look at the employment numbers, the economic growth, there is a slowdown onto that one. Supply shocks is what the markets are seeing because of various reasons. It is about underinvestments, it is about because of the war, and pandemic-led labor shortages is where we started this whole deal with. Stagflation also happens when it is a war-like situation where we are into right now. It could be natural disasters and it could be a pandemic, and we seem to be into a recipe of all of that at this point in time. And add to that the high crude oil prices and also excess liquidity into the markets that has made that excess room for the commodity prices to continue to rise higher. Well, if you are looking at the kind of commodity price rise that we've seen until now, from its highs, even as many of these commodities have corrected anywhere between 10 to 30%. But when you compare it to the last year, most of these commodities are still 40 to 150% on the higher side. That is the kind of price rise we are still now sitting at. And most people will tell you that the concerns are not out of the window. We still are looking at inflation. There still are concerns from the war there. So the prices of many of these commodities could be on the higher side. Will the economic growth catch up? Will the employment catch up? Will we see GDP numbers continue to gain higher? That is still a question mark, and that's exactly what stagflation also means. The other thing is the fear of stagflation coming in from the input costs as well, where we have seen higher input costs in sense of freight, shipping, the crude oil prices itself, and the high input cost have led to lower production. Usually what happens is when you see prices going higher, that would mean higher profit for you. Miners and producers will start increasing production because they see higher profit. But that's not what we're looking at right now. Because of the higher input cost, because of the concerns about growth and demand going forward, we have seen production continue on the lower side here. We also are witness to factory shutdowns in Europe, in China, due to high energy prices. So there is a lot of factors at combination here, and that points out to the concerns of stagflation going forward. Another interesting thing before I close this down is that during stagflation, there are lots of debates on where should your money be invested in really, and the top answer clearly is about commodities. When you look at the first 2 months of this year itself, we have seen fund inflows into commodities at the tune of $7.5 billion. This is the highest in many, many years. Actually, when you look at the last couple of weeks itself, we have seen a tune of $5 billion in commodity ETFs itself. That is something that we usually see as a volume in a month or so. So we are looking at a huge amount of buying in commodities. Every dip, every decline seems to be getting bought into because there are concerns about stagflation. And as I said, tangible commodities really seem to be the way out into this one as far as investment goes.